Good morning, I'm Bea Santiago sitting in for Mike Ureta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and insights you need to navigate, adopt, and lead. Let's dive right in. Deficit narrows, but revenue strains persist. Government set to borrow 824 billion pesos in first quarter of 2026. President Ferdinand Marcos Jr. to sign 2026 budget January 5. Securities and Exchange Commission unveils who really owns Philippine companies. New York Times reports sues AI firms over pirated books. Less spending, smaller deficit, but don't cheer too soon. The Philippine government's budget gap narrowed 26% in November to 157.6 billion pesos, even as revenue growth barely moved. Expenditures fell for a fourth consecutive month, dropping 9.6% to 498.3 billion pesos. Meanwhile, total revenue inched up to just 0.7% to 340.7 billion pesos. Tax collections rose 2.8% to 301.4 billion pesos, but non-tax revenues plunged 41.6% as the economy continues to reel from a flood controls corruption scandal. Analysts suggest the trend could reflect tighter spending and stronger governance measures aimed at preventing corruption. The Philippine government is betting big on domestic debt, nearly doubling its short-term borrowing in the first quarter of 2026. It plans to raise up to 824 billion pesos. The Bureau of Treasury targets 324 billion pesos through treasury bills and up to 500 billion pesos via treasury bonds. That's about 89% more than the fourth quarter's borrowing program, reflecting a more aggressive funding strategy. For the full year, total borrowing could reach 2.68 trillion pesos, with roughly 77% expected from local sources. The 2026 national budget is ready to be signed, but the timing may test the government's efficiency. President Marcos is set to approve the plan on January 5, even as questions linger over billions in unprogrammed allocations. Lawmakers have cleared 243 billion pesos in strategy funds, yet scrutiny remains high over the proposed spending. Congress aims to approve the bicameral report by December 28 and 29. Senate leaders warn the government could temporarily operate under the reincarnated budget if delays occur. Experts say such delays could signal legislative bottlenecks and create uncertainty for markets and public spending. Hidden owners won't stay hidden for long. The Securities and Exchange Commission is launching the 2026 Beneficial Ownership Disclosure rules to bring greater transparency to Philippine businesses. The rules aim to tighten anti-financial crime enforcement, align local standards with global norms, and strengthen coordination among government agencies. Key measures include digitalized reporting, stricter disclosure and verification, controlled access to ownership data, and a 20% reporting threshold in line with Anti-Money Laundering Council rules. Experts say reforms will clarify accountability, protect public funds, and provide stronger safeguards against financial crime. New projects are following in, yet the Philippines still trails its investment goals. The Department of Trade and Industry, through the Board of Investments, approves 29 projects worth nearly 125 billion pesos. These initiatives are set to create over 4,000 jobs nationwide, mostly in IT and business process management sector. Still, the total of BOI approved investments for 2025 now reach only 977 billion pesos, just 56% of the 1.75 trillion peso target, as global trade tensions and global uncertainties weigh on investor confidence. Despite the gap, the DTI and BOI officials remain upbeat, pointing to strong investor interest and ongoing efforts to position the Philippines as a regional hub for smart, sustainable investments. The Philippines is outpacing expectations in artificial intelligence, climbing up to 49th out of the 195 countries in the 2025 Government AI Readiness Index. Scoring 57.76 out of 100, the country ranks 9th among Asian Pacific peers. ahead of Vietnam, Brunei, and Mongolia. The index measures AI adoption across 6 pillars: policy capacity, governance, AI infrastructure, public sector adoption, development and diffusion, and resilience. With 2.6 billion peso in government-backed AI projects through 2028, the Philippines is positioning itself as a regional hub for artificial intelligence. Typhoons are testing more than coastlines. They are challenging the Philippines Central Bank. The International Monetary Fund warns that stronger storms could complicate monetary policy, forcing the Bangko Sentral ng Pilipinas to juggle disaster recovery with inflation control. This month, the BSP cut its key rate to 4.5%, the lowest in over 3 years, aiming to support growth amid storms and corruption-linked economic disruptions. The IMF says central bank must rebuild the economy while keeping inflation expectations anchored. As the Philippine economy slows to 4% growth in the third quarter, many are wondering what this means for the rest of the year and what 2026 might bring. To help us navigate the outlook, we speak to John Paulo Rivera, Senior Research Fellow at the Philippine Institute for Development Studies, about growth, projects, inflation trends, and employment challenges. Good morning, JP. Welcome to Business 360.
Good morning, Bea, and thank
Merry
you for having me
Christmas.
here. Yeah, Merry Christmas.
So the Philippine economy slowed to 4% growth in the third quarter. What is your growth projection for the fourth quarter and full year performances?
Well, based on the PIDS macroeconomic forecast that we did, we expect that fourth quarter GDP would expand or would grow to 5%, which would also bring the full year growth to around that 5% figure. And this is particularly driven by the holiday spending, the surge in holiday spending, and the inflow of remittances that's fueling the household and individual consumption. While government spending has actually slowed down due to the corruption issues, and there are also slowdown in the industrial performance, we are optimistic of the boost that the consumption would bring to fourth quarter and full year growth. Although there are certain organizations and agencies that have actually reduced growth forecast for this year, and that is also understandable because we're coming from a Q4 2024 of 5.3%, which is actually a slowdown, already a slowdown to 5% for the fourth quarter of 2025.
But which sectors are likely to provide the biggest boost or drag to growth in the fourth quarter?
Well, in terms of boost, we are seeing that domestic consumption would be the primary boost because it is actually fueled by remittances and the Christmas bonuses received by employers, rather by workers. But then this is also being driven by the gradual growth, particularly in the tourism sector and the continued performance of the IT BPM sector.
Yes. What is your economic growth outlook for 2026, and what are the key factors expected to drive this growth?
Well, similarly, in our PIDS macroeconomic forecast, we're seeing full year 2026 GDP growth to be at 5.3%, faster than what happened here in what we're expecting in 2025. And it is actually driven by the assumption that the corruption issues that would be resolved, and that confidence from investors, both local and foreign, would actually resume because of the necessary steps that government is doing to actually pin down what went wrong in 2024 as far as flood control projects are concerned.
But what are the risks that could significantly alter your 2026 growth outlook?
Well, risks would continue to include climate effects of rapid onset climate effects, such as the impacts of typhoon on agricultural production, and also the continued discussion in the corruption issues, which would actually weigh down on investor confidence, which would also weigh down on consumer confidence, enabling everyone to be very cautious about their investments and economic behavior for next year.
Do you expect an uptick in inflation this month or for the remainder of the year?
Well, historically speaking, the fourth quarter of the year would see an uptick in inflation. But for 2025, we're actually seeing this to be just a very marginal increase because of the very slow turnaround in government consumption. So the demand for fourth quarter is not really that high to warrant a significant uptick in inflation.
So for the inflation outlook depends on how much you think of the inflation outlook depends on food prices and the typhoon that we mentioned earlier?
Well, again, historically, the inflation rate of the Philippines, the headline inflation rate for 2024 and 2025 has been driven by food inflation. So I would say that the food inflation is actually a significant driver. It has a significant component in driving headline inflation. So it's really very critical that we continue to arrest the surge in prices by pursuing food security, particularly in the agricultural sector.
So what is your inflation forecast for 2026?
For 2026, it would continue to be anchored on expectations and that healthy inflation range between 2% to 3%. And it's because for 2026, demand would just be picking up. 2026 can be considered as a transition year for the economy to actually recover from the issues that we face this 2025.
JP, Finance Secretary Recto claims that economy will be back on track in Q1. What are your thoughts about it?
Well, it is always possible for the economy to be on track by first quarter, immediately first quarter. But then for that to materialize, we really have to do something now. Outcomes have to manifest now before the year ends, though we still have a runway. And that will actually fuel the restoration of confidence, of trust again on the governance system, on the economic system. And therefore, if that happens within 2025, then we can expect optimistically that something positive can happen as early as the first quarter.
We're hopeful. With the current inflation rate at 1.5%, do you expect the Bangko Sentral ng Pilipinas to continue its monetary easing cycle?
Well, holding other factors constant, I would expect that the BSP would continue to relax policy rates because we need to drive the economy through lower interest rates. Then it is expected that credit would increase and economic activities would also resume. So I'm expecting a continued relaxation of interest rates, provided that our macroeconomic indicators remain to be anchored.
How might global monetary conditions affect the BSP's policy decisions, you think?
The BSP has always been deciding on relaxing rates on their monetary policy. They're always very calibrated on that, relying on data. And depending on how global interest rates would behave, how the federal bank would actually behave in terms of cutting its interest rate, then that would be the basis of the BSP to continue the cutting of interest rates or would just hold interest rates for 2026.
How many rate cuts do you project from the BSP next year and by how much?
Given the behavior of the economy this 2025, I'm expecting 2 rate cuts, 25 basis points for each cut, summing to 50 basis points for the whole year of 2026. That is very calibrated, that's very conservative, and it would actually be a balancing act for the BSP to manage both interest rate and pressures on the Philippine peso to depreciate.
When do you expect the first rate cut to occur?
Well, as early as the first quarter meeting, we might see, again, depending on how the full year 2025 would go.
Okay. The unemployment rate rose to 5% in October, and with labor groups such as Centro linking this increase to alleged mismanagement and corruption in flood control projects. Do you see a correlation between rising unemployment and this kind of issues?
Well, there is. There may be a strong correlation between corruption issues and rising unemployment. And this can be driven because of the slowdown in government spending, particularly in construction. And the slowdown in construction activities would actually also reduce the demand of construction firms for workers, therefore contributing to unemployment. However, this also has a role in terms of all the other supplementary or complementary employment generators in relation to construction. The slowdown in one would also result a slowdown in other sectors, thereby contributing to further unemployment if the issues are not arrested.
How do infrastructure failures or delays typically affect unemployment at local level?
Well, at the local level, the delay would actually reduce corporate demand, industry demand for workers, and because of these flood controls, the delay, then trust in the economic activities also being reduced, and other sectors of the business would actually also be very cautious in hiring because they don't know what will happen exactly.
So it's almost 2026. Do you expect the unemployment rate to continue rising through 2026, or do you see conditions improving?
Well, conditions may improve, but it is always based on whether confidence and trust on government protocols, policies, spending would also be favorable for the employers.
What policy measures would be most effective in preventing further job loss?
Well, policies would include, again, number one, there would be reskilling for 21st century job skills. Number two would be to continue working on resolving the corruption issues so that the employment driven through construction can be restored. And of course, allowing climate sensitive industries so that our workers are not prone to seasonal unemployment.
President Marcos is set to sign the 2026 national budget on January 5. What impact do you expect this timing to have on the economy, government programs, and infrastructure spending?
Well, I would look at this from an image-wise perspective because the delay would actually allow the first few days of 2026 to actually work on a reenacted budget, which may cause inefficiencies for the first 5 days of the year.
Okay, as a follow-up, if the budget is signed late and the government begins operating under reincarnated budget like you mentioned, what economic or administrative risk could result from that?
Well, delays would always cause the multiplier effect of any government spending to also be delayed and may not manifest fully. And because of that, the slowdown may also manifest in the growth figures for Q1. And the economy is very sensitive to delays, and any further delays that our policymakers would do would definitely manifest in growth figures for next year.
Given the slowdown in policy developments in 2025, how could you sum up the economy this year? What is your outlook for 2026, including the key drivers of potential challengers?
Well, for 2025, we've seen the cost of corruption and how it affects the economy. We saw the ill effects of corruption, especially if it is actually being fully exposed with the number in it, and the economy is actually reacting on political risk. For 2026, this should not continue anymore so that the economy can start recovering and work its way towards the upper middle income country status that we have been aspiring for.
Thank you very much, JP Rivera, Senior Research Fellow at PIDS.
Thank you.
Thank you for being here on Christmas.
Yeah, no problem.
We're taking a quick break. Stay with us as we dive into the numbers and the stories that matter most to your bottom line. Let's see how Western markets close and what it means for Asian traders this morning. U.S. stocks rose on Tuesday with the S&P 500 closing at record after economic data lifted. Bonds yields on boosted growth stocks. In Europe, markets closed mixed on Tuesday. London's FTSE 100 and Germany's DAX rose as bank and minor stocks gained amid light trading before Christmas. Let's check on how Asian markets are doing this morning. So far, the Nikkei 225, Hang Seng, Kospi, Shanghai Composite, ASX 200, and the Straits Times Index are all in the green. The currency market and the Philippine Stock Exchange are closed today as we celebrate Christmas Eve. Metro Manila drivers may spend more but save time eventually. San Miguel Corporation says Skyway Stage 4 just got more expensive. The 32.7-kilometer expressway from Taguig to Quezon City now costs over 55 billion pesos, up from 45.27 billion pesos in 2019. Inflation, higher material cost, and project refinements drive the increase. SMC stresses the hike won't change the project scope and awaits the toll regulatory board's approval. Once right-of-way issues are resolved, the first phase could open in 2 years, offering drivers a new route to ease EDSA and C5 congestion. Toyota is charging ahead in the Philippines, but infrastructure still lags behind demand. Electrified vehicle sales jumped 45% in the first 11 months of 2025. Total Toyota and Lexus EV sales reached nearly 17,000 units, reflecting growing consumer interest in clean mobility. The company recently launched an Active Hybrid EV and BZ4X battery EV to expand its electric lineup and support national clean energy goals. Toyota notes that hybrid EVs remains the most accessible option thanks to fuel efficiency and the country's limited charging infrastructure. Top writers say AI is reading their books without permission. Now they're filing suit. John Carreyrou of New York Times and 5 authors sue Musk, xAI, Google, OpenAI, Meta, Anthropic, and Perplexity, claiming their books train chatbots without consent. The authors skip class action settlements, calling earlier deals a tiny fraction of what copyright laws allows. Perplexity says it doesn't index books. The other companies have remained silent. As we close out the year, it's easy to get caught up in the headlines, the challenges, and the corruption probes, and the market volatility. But through it all, one question still matters most. What keeps us rooted in the Philippines? What still makes the country worth believing in? This December on Business 360, we asked respected business leaders to share a short message answering what they love most about the Philippines. Today, Tim Daniels, consultant and head of investor relations and sustainability at SM Investment, shares what makes him love the Philippines this Christmas. Here's his message.
Well, obviously, I'm not originally from the Philippines, but I have chosen to make this the place where I live. And when I'm asked by my friends abroad what it is about the Philippines that I like, the first thing I say is when you come here, you're going to be blown away by the natural environment. It's such a lush, biodiverse place to live. And coming from a cold, wet island, it's really a treat to live in this tropical environment with all of the nature surrounding you. Secondly, I tell them about the people who are some of the kindest, generous, most family values-driven people anywhere in the world. Filipinos genuinely care, and they smile when they do everything, even when things aren't going so well. And today in the world, there's so much turbulence. Every country, we have economics, politics, societal, and environmental challenges going on. But in the Philippines, people smile and get on with getting on and growing the economy despite all of that. We have over 4 decades of some of the highest GDP growth anywhere in the world as a result, and that's a real accomplishment. And it's because we have smart business people who find solutions for growth, and we have millions of hardworking Filipinos here and abroad who contribute towards it. And they do so despite everything. They're resilient and they smile. What other country in the world will celebrate Christmas for 4 months of the year? It's that kind of upbeat optimism and can-do energy that makes the Philippines a place I want to live in. And I've no plans to leave.
When the going gets tough, the Philippines still gleams with resilience and hope. Here's Business 360 anchor Mikey Oreta.
Christmas comes at a time when Filipino businesses are being tested by slower growth, tighter money, and a year of tough headlines. But even in a difficult year, the private sector continues to show resilience, optimism, and a long-term belief in the Philippines. Today on Business 360, we bring you messages from some of the country's top business leaders on gratitude, hope, and why we still believe in the Philippines.
What do I love about the Philippines? Hands down, it's the people. They're the kindest, selfless, most generous people in the world. I personally had the experience of their kindness when I was rescued by a group of Filipinos when we crashed in the top of Mount Makulot. A group of Filipinos of all ages ran up the mountain in the middle of a rainstorm to help us. We were complete strangers, but they risked their lives to help us down. Up to this day, I am forever grateful and blessed to live in this beautiful country surrounded by these beautiful Filipinos. I'm forever grateful. Thank you.
2025 started out to be a year full of hope, but turned into a year full of challenges and difficulty. But there's still so much to look forward to for the Philippines. What I love about the Philippines is really at the very heart of it are the people. The people, as we know, Filipinos are friendly, they're hardworking, they're creative, resourceful, and they're a lot of fun. But at the same time, Filipinos are also short-sighted, they're very forgiving, and they have this bahala na or pasensya na attitude. As we enter 2026, it is my hope that as a Filipino people, we get together and look at ourselves, become more forward-looking, have a vision, and be more discerning, not just about our future leaders, but about ourselves. Living with integrity and accountability, maybe we can make the country a better place so that we can leave it a better country to the next generation.
And that's it for Business 360. I'm Bea Santiago. Thank you for joining us.
Keep it here on BNC, the Bilyonaryo News Channel. Have a Merry Christmas.